All right, good evening, everybody. Welcome to this week's Traders Club by ChartNexus. My name is Gerald. Okay, let's take a look at STI. Yeah, so, okay, today is the 14th of April, right? So market is closed. Now it's 7 p.m. The data has just come in. So as we know, today is another bullish day. Yeah, so following Dow Jones rise. So, I mean, the futures reversal on last night's small loss. So what happened is STI, the chart is not updated yet, but you can see over here, we were up by 67 points today. So it basically closed around 2634. Yeah, this is where the line is. Okay, so it appears that even though we are at this resistance zone between 20 and 50 MA, yeah, but the bulls are still very much in charge. So the next potential confluence of resistance will probably be this gap here, right? So this gap was formed sometime in mid of March. Okay, so if I have to zoom it in, right? So you see this gap resistance. So there's this potential gap resistance, and it may be in confluence with the 50 MA, which is falling. Yeah, so if this 50 MA continue to fall, so this is where the confluence of resistance is. So right now we are here, right? So we're about less than 2%. Yeah, so less than 2% away from that resistance. Okay, so there's still some room to go, but again, let's not be overly bullish. In fact, the higher we have rally up, the higher the chance of it turning down. Okay, so today basically what I'm going to do is let me revisit some of the stocks that we discussed last week. Yeah, so to have a follow through and see whether some of you are in and what do you do with those positions, or not in yet, what do we continue to wait for? Yeah, so I'll talk about long and shorts as well. Okay, okay, so let me move to the stocks that you could be going long first, right? Okay, so SGX, I got a few inquiries about SGX. Yes, some of them went in on the break of 939. Again, this is something that we discussed quite a bit. You look at our past videos, all right, so you can get a better understanding why 939. Okay, but there are some who have missed it, and they were asking about, Gerald, what is pullback strategy? Because we did discuss that if you miss breakout, you wait for pullback. All right, so at that time when SGX broke out, two things could have happened. It could have rallied and continued to rally. All right, but it could also happen like what is happening now, pulling back. Yeah, so although it has not yet really pulled back too much, it's basically just consolidating here around 970. You do not want to just enter here if you're not in yet. Yeah, so basically what you look out for would be a pullback back to 939. Sometimes the pullback could be slightly lower. Yeah, so what I want to see is, assume for those who have not taken the trade, right, you wait for the pullback and wait for it to come back to 939 plus minus. But at the same time, 20 MA would then be already up here, and 50 MA could be following through like that. And so you could get into a confluence of support, and that's where we can see whether the market will be able to get some buying at this support here for you to take the trade, right? So it's just a potential opportunity. It's not something that may happen. We can't predict, right? So if SGX continue to run up, then we got to look for the next opportunity going forward. But in the event SGX basically pulls back down for the next few days, and then it comes back to test this zone, right? It's a horizontal support plus 20 and 50 MA zone. Then this is where we can start to look out for any buying signal. Yeah, it could be your MACD 481 green. Okay, so for those who are in, that's where you continue to stick to your stop loss plan. For those who are not in, no point entering here. Wait and see if it manages to go back to retest the support. All right, so this is SGX. Okay, besides SGX, the last time we were looking at, we are talking about a chart formation, right? I'll just share with you Venture because that was the one that formed it first, and then it starts to happen, right? So this is Venture. So Venture at that time in early April, this is where you can see the double bottom, right? Remember? So we were talking, we didn't talk about this, but after that, there are some stocks that begin to manifest double bottom signal. So I'm going to talk about those in a while, like Capitaland, ComfortDelgro, Semco Industry. Okay, so just to revisit, what is the trading plan for double bottoms like this? Yeah, so double bottom is the trend came down, bounced up, went down again, but didn't go lower. Yeah, it bounces up. So you can see it's like a perfect, almost perfect W. But the key is still the break of this high. Yeah, so this was the last test of the high. So that's what we call a double bottom. Price came down, bounce up, came down again, bounce up. So 1449, 1450. So if you can break this level, then that will be the trade, that will be the breakout trade. All right, so this where, yes, we can see for venture, it did break out. Yeah, so this is the breakout day. And of course, subsequently, as we can see now, as of now, yeah, today, yeah, it has continued on its run. So it's a reversal strategy. Okay, let me just point out the stop loss if you were to take trades like this. I mentioned in one of the videos as well, looking at stop losses. So venture, if you were to take the trade over here on the break of 1450, right, something like this. Okay, I actually did break out. So let me just erase this. Okay, so if you take a trade like this, basically, if you set your stop loss and you go to the bottom here as the stop loss, then you could be risking quite a bit because remember, breakout trades basically means you're buying near to resistances. Yeah, so what we do not want is to have a stop loss that is so far away because you're trying to look for the break of the support. Yeah, so your stop loss could be too far and it may not be worth the risk. So usually, generally, what we do for breakout trade is that we use the ATR. Yeah, this indicator called ATR. ATR basically is the daily average movement of the particular stock. So if so, our stand is that if the price falls by more than twice the average daily movement, then probably the stock has lost its breakout rally legs. Yeah, so that's where we can do a stop loss. Okay, so for example here, you can see the ATR is about 70 cents. Yeah, so you can see the value. You don't have to be exactly, but you can see the ATR value is about 70 cents. So twice ATR means 2 times the value of ATR, that will be $1.40. So if you take the breakout trade from 1450, there's a breakout, and then you bring it down by $1.40. Yeah, so this is where your cut loss may be. All right, so your cut loss could be at around $13.20. So you can see your risk is less than 10% compared to if you to take a stop loss only on the break of that support for breakout trades, then your risk could be so much higher, almost twice, 16%. Okay, so for breakout trades, I would suggest you use the 2 times ATR to set your stop loss, right? But please do not set it too near because breakout trades, sometimes they tend to have some whipsaw. If you set your stop loss too near, you get whip out. That means the price came down, hit your stop loss, and then it rallies from there. All right, so I think based on our experience and our past result, I think 2 times ATR is something that is comfortable and it applies to almost every single stock, right, that you can trade, that you can use for breakouts. Okay, now, so venture, I'm just doing this as a case study. It's already happened. No point trying to chase it now. Okay, so last week, when I talk about venture, what I did was I highlighted Capitaland because Capitaland is one of those stocks that was forming similar pattern. Yeah, so you can see is same thing, downtrend, and then there was a rebound, but it failed to go higher naturally because it's a downtrend. There's this rally that is resisted, and then it came back down. But the thing is, unlike other stocks that may be still falling on a downtrend, it starts to show some reversal again. All right. So the key will be this guy here. Okay, so it's about $3. Yeah, 302. So if there's a breakout of 302, that's where you could be looking at the trade. Preferably the breakout is on high volume. Okay, so as we can see, the breakout hasn't manifested yet. So in fact, you can see over here, $3.20 seems to be quite stubborn. Basically, the market is telling you they feel that Capitaland is not really worth more than 302. Yeah. All right, so yeah, the market is basically saying that it's not worth more than $3.02. Yeah, so this is where it hasn't broke out yet. Okay, so wait for the breakout, but in case you're still preparing this trade, you need to set your stop loss, right? You need to get your stop loss prepared. So in the event it does break out, it's still a valid trade. Okay, so use this as a practice now. So if you look at the ATR, it's about 13 cents thereabout. So 13 times 2 is 26 cents. All right, so 26 cents, 302, you bring down 26 cents. Yeah, so you're looking at about here, right? So it's about less than 9% of a cut loss. So you're risking less than 9%. So you're looking at about 276. Of course, the breakout has to be 203. Yeah, so you need to take the trade if it's 203. So your stop loss is around 277. Right, so that will be your plan. Yeah, if you were to take a breakout trade for Capitaland. Okay. Okay, there's another stock very similar, right? So ComfortDelgro. Okay, remember last week we were talking about this as well. So ComfortDelgro similarly was forming a beautiful double bottom. All right. So basically this is the key before the breakout. Yeah. So there's this point here, and this is where we have $1.58. So wait for 158 to break. Okay, then let's see here. Guess what happened today? Yeah, so I was watching it as well. Try as it may, right? 158 is again stubborn. The market is very clear. 158 is too expensive for ComfortDelgro. At least that's what they thought today. All right. So if tomorrow it does break up, then the market's view has changed. Then probably that's where the trade is on. Yeah. But as far as today is concerned, it's still not able to. So let's not jump the gun. Like I said before, if this resistance continue to hold, we may see it just go sideways and the double bottom becomes no more double bottom. It just becomes range bound. All right. So let's be patient. But again, in the event if it does break out, let's set our stop loss. All right. So we always protect our capital. Okay. So the ATR, the 2 times ATR is about 7 cents. So 7 cents times 2 is 14 cents. So if the breakout is 159, 159 bring down by 14 cents. Yeah. So that is where you're looking at about less than 9% of risk. Okay, so if you take the trade on the breakout, be sure to cut loss as if it goes down by 14 cents. Okay, so this is how you plan your trade. Okay, one more similar pattern, and similarly has not broken out yet. The Samco industry. Okay, so double bottom as well. Not as perfect, but you can still see there was an attempt. Okay, so I think the key now is this. All right. Okay, the key now is 167. Okay, so wait for the breakout. If there's a breakout, your ATR 7 cents. So twice 7 cents is 14 cents. Bring down by 14 cents. So you're about again less than 10%. So only less than 9%. Okay, for Samco industry. Okay, but please bear in mind if there was to be any breakout, right? For those of you who are alert and aware of the things that I'm going to say next. Okay, if there were to be a breakout, be very careful because the breakout is breaking out into what we call a gap resistance. See, there's a gap here, over here, the price gap down. So basically, we are so near to this resistance, gap resistance, that any breakout, it may immediately go into the sell zone. Yeah, so this whole thing is a gap resistance. So if there's any breakout, you take the trade, there is a chance that this gap resistance will hold and the price breakout may not be as successful. All right, so be mindful of this. So I'll be less comfortable with Samco industry, sorry. All right, so just to recap, the 2 stocks that you could wait for this breakout, which is more what I call lesser risk than Semco industry will be Capitaland and ComfortDelgro. Okay. All right. Let's now look at some of the. I'll use a screener, right? ESP Master. So for you guys who are ChartNexus member, you will have the ESP Master screener. As you know, this is the one that save our time because we already built in our trading rules in it. So just a click of the button, and then you tell us what are the stocks that we can long, because it has triggered our buying signal, and what are the stocks that we can short, because it has triggered our shorting signal. Yeah. So if your screener is expired, please go to our website to renew. All right. Or just drop us an email at support@chartnexus.com and you can do a renewal. Yeah. Okay, so let me just screen out. Let's see what are the stocks that we can long first. So the screen. Okay, so as you know, the screening takes less than a minute, in fact. So basically, it's automated. Only those stocks that meet the criteria will appear. So I'm screening for SGX stocks now. Okay, for the at support, basically we screen out stocks that are trend trading, we screen out stocks that are counter trend, and we screen out stocks that may have a bullish candlestick pattern. Yeah, so those are the few rules. So some of the stocks may meet those criteria. Okay, I'll ignore the DLCs, right? So just take a look at SPH. I think last week we did talk about SPH. Yeah, so today it appeared again. Okay, SPH, let me just quickly touch on it because last week I think it was triggered as a counter trend signal. Okay, let me clear this thing. Let's see. All right, I think last week there was a buying signal on the counter trend. So counter trend signal means the trend was down and you're looking to buy. So it's generally a risky criteria. If anyone has taken the trade, I hope you have set the stop loss. If you have triggered a stop loss, please exit. Because if it's a downtrend stop, then I think the likelihood of it continuing down could be high as well. So if you trigger a stop loss, please exit. Now, for those who are looking at it today, the reason why it's appearing is not so much of an indicator signal. It's purely based on this candlestick, right? It's an inverted hammer. So there's no other indicator at play. It's just saying that there is a bullish reversal candlestick pattern. You take a look at it, right? The entry price is 156. So which means if tomorrow it can hit 156. So tomorrow, right, the market trades to 156, you can take the trade, and cut loss, of course, is 149, yeah, below the recent low. Potential profit targets are up here. Okay, so judging by this, I think it's not a very good trade because the risk and reward is 1-to-1, you can see, and it's a downtrend. So which means already the likelihood of a successful trade is lower, and then your reward is not so much justified by the risk. All right, so not a good trade. Yeah, so a lot of stocks have gone up per se, so there's not much buying opportunity, right? So probably you can look at Capitaland and ComfortDelgro for the breakout of their double bottom instead. Okay, now looking to short, as I mentioned, we are now definitely in the resistance zone. A lot of stocks are between the falling 20 and 50 MA, including STI, including Dow Jones Index, including many stocks. So for those who are fingers ready to short, let's take a look at some of the opportunities that present themselves today. Yeah, so I'm going to pick those that has a better reward, yeah, lower risk. Yeah, so because there are a few that has triggered some shorting trading signal. So I'll just highlight those that the risk reward is desirable. Okay, so now I'm screening at resistance. So show me those stocks that potentially I can short. That means they have triggered my shorting signal. Right, so there are quite a few, but like I said, okay, I'll ignore those indices, right? I'll pick those that has a good risk and reward. Yeah, so things like this, you know, like a cordial golf, probably I will not be looking at it. You look at the risk is 11.8%. You can see the stop loss, yeah, 11.8%. Nah, not worth the risk. Okay, I'll look at as Sanders REIT instead. Okay, so let me just clear the indicator. Yeah, so we just need to look at this. Okay, so Sanders REIT, it has triggered this signal called downtrend. Okay, so for those of you who have attended our training programs already, downtrend basically means a stock that had been falling, yeah, indicator showing downtrending, and the price have now rebounded to test a resistance, and MACD showing a selling signal. All right. Now the reason why I highlight this stock now compared to the others is, okay, look at the entry price. So the entry price in blue. All right. So you can see 280. So if tomorrow if they come down to 280, is a stock to look to short. Cut loss up here, 294. So you can see the risk is relatively low. It's only about 5% cut loss. So which means if we take the trade at 280, and then for some bullish reason, it went back up to 294, get out. It's only a small risk, 5%. All right. But the potential profit, as you can see below, first level 10%, second level about 18%. Yeah. So generally, you're looking at least 2 to 1. In fact, 3 or 4 to 1. Yeah. So a good risk. But of course, provided if you're wrong, you get out at 5%. Yeah. But if you're wrong and you refuse to get out, right? If you short here at 280, and then the price were to continue break past your stop loss and go higher, I think you will be in for 20% cut loss or worse. All right. So look at Sanders REIT for those who are keen to short. Yeah, I know shorting is for REITs, especially, is not something that we are used to do in the past, because REITs are generally viewed as a defensive stock and they have dividends to show for. Okay, but I think in times like now, whereby all these properties and retails are taking hits, so this is where I think any stock with a bearish signal is worth a try, especially if the risk is relatively low. Okay, so that's one, Sanders REIT. Okay, let's look at the others. Like I said, those that risk and reward is no good, like Escort REIT, the risk is 12%. I'm not going to try and look at that. CityDev, your risk is 10%, and then your initial profit is only about 2%, and at best 12%, 70%. So not risk reward. I'll take a look at Mapletree Industrial. Yeah, so let's take a look at Mapletree Industrial. Yeah. Okay, so quite similar to Sanders REIT, right? So, okay, this signal is CNX down. So CNX down, if you refer to your notes in the past that we gone through the training, CNX down basically same thing, downtrend stocks, met with a resistance and trigger a bearish signal. So the bearish signal could be a stochastic bearish crossover or a bearish candlestick pattern. Yeah, so in this case, this is not bearish candlestick pattern. It has to be because stochastic bearish crossover. So let me turn on stochastic, right? So you can see this is 15. No, it should be 5. Yeah, so we use stochastic 5. Yeah, so you can see here, there's a bearish crossover, the blue line turning down. Okay, but more importantly, the risk to reward. So if you take a trade, of course, please wait for the entry price of 239. It must hit 239 short. Cut loss, if it goes back to 249 and your stop loss is less than 5%. Yeah, including your commission in less than 5% of risk. Potential downside, if you were to come back down, you could have a 12%, so easily 3 to 1. And if you were to go back to the crisis low, right, then this is where you're looking at 22%, 5 to 1. Yeah, so generally much better risk to reward. Okay. All right, so that is Mapletree. Let me see, is there others? Olam, yeah, it's also a bearish signal, good trading opportunity, but the risk to reward again not as comfortable. Right? Let's look at Raffles Med. Okay, Raffles Medical. Again, not the best, but compared to some of them is not bad, not as bad. Okay, so it's 1-to-1 at least. So you can see here is CNX down. It's due to this shooting star bearish candlestick. So CNX down, I repeat, is because it's the downtrending stock met with resistance, bearish signal. So the bearish signal could be a stochastic crossover or a candlestick. So in fact, there's both. It's a shooting star at the same time is the bearish crossover. All right, so you have a confluence of signal. Okay, wait for the confirmation 84 cents, but your risk is 7%, your initial profit is also 7%. Yeah, so it's not as attractive as Sanders and Mapletree Industry. Okay, but the other downside, you could have up to 13%. Yeah, so you're slightly 2-to-1. Okay, let me look at one more, sets. Okay, so if you look at sets, yeah, is also a CNX down rule. So CNX down, basically, again, downtrend met with resistance. Bearish candlestick, which there is none, but there is a crossover here, stochastic. Right, so wait for confirmation of $3.11, cut loss 7%. So your first profit is about 10%, subsequent about 18%. So easily, at least it's more than 1-to-1, and then you could go up to 2.5-to-1. All right, so generally more attractive risk to reward. Okay, UOL, no, the risk and reward is not nice. Yeah, not attractive. Okay, so if I may, just a quick recap. So the 4 stocks that you could be looking at for shorting, yeah. So there will be Sanders Reed. There is Mapletree Industrial. There is Peppers Mac. There is Sets. Right. So these are the opportunities for the day, for today. Yeah, it's 14th of April. Okay, so these are for the shorting. Now for the, just put it. All right, for short. Okay, too long. Just now I did talk about double bottoms. Yeah, so we want it to behave like venture. So, but of course it has to break out first. You have Capitaland, you have ComfortDelgro, you have Sembcorp Industries, but there is a gap above. So be careful on that. May not be a good stock to go long. Yeah, because of the resistance. Okay, yeah, so this is the summary. If I could just get this up. Yeah, so this is a summary. So basically, these are the trading opportunities that present themselves today. All right, so 2 things very important. Wait for the entry price. So the breakout, wait for the breakout price and with good volume. For shorting with CNX down and downtrend rule, make sure the entry price is confirmed. That means it hits the entry price. And for both, please set your stop loss. All right. So for the double bottom breakout, stop loss 2 times ATR. For the shorting one, you have the signal here for the ESG master to guide you on the shorting cut loss. All right. So with that, yeah. So any question, just leave in the comments. I'll try and answer that in the video tomorrow. And again, share this video to your friends, and of course, give it a like if you feel that this has been helpful to you. All right. So my name is Gerald. Thank you for watching. Thank you for attending today's ChartNexus Traders Club. Okay. So we see you soon. Yeah. Take care.